Boom. All right, what's going on, you guys? It's Royce Jacob. Welcome back to the channel. In this video, we are going to be talking about many aspects of the financial markets because this is a macro analysis. As you guys know, these waters are a bit murky at the moment. We kicked off the trading week with some volatility, and I'm sure you guys will not be surprised to hear, especially if you've been tuned into the last few videos, that I do foresee more volatility on the horizon. I, of course, do want to give you guys a few of my general thoughts as well around how I personally plan on navigating this volatility. So let's get into it. As always, we'll quickly go over a few of the names we're going to be discussing today, and then we'll dive into each one individually. In front of us, Trading View, where we will talk technicals, price action, and price targets on the following names today. In this order, going down the watch, so you can see right here on the right. Kicking it off, of course, got to kick it off with Bitcoin. So Bitcoin going pretty darn accordingly. Again, if you guys have been tuned into the videos lately, you know that I have been expecting a move down to the $41,000, $42,000 range. We got very close, this low right here, to bottoming out at just about 42K. So getting very, very close to the price target that I've had set for, I would say, the better part of a week or so now. And it will be interesting to see if we're bottoming out now, if we are starting to capitulate, go sideways. I don't think it's very likely, if I'm being completely honest, that we just see a bounce up, we just come back, it's back to the races. I do think some sideways price action is ahead, but as we dive into the charts, I do, of course, want to talk to you guys about how I foresee the next week or two playing out. Just price targets to both the upside and downside. But again, the markets, just from a technical perspective right now, I do still skew a little bearish, all right? So we'll kick it off with Bitcoin, dive into ETH over the course of the past 40 minutes when these charts recycled on TradingView. That's why you're seeing some green here. Very refreshing considering these are still actually in the last 24 hours at the time of recording, probably down like 6% or so. Popping a little bit now, which is nice to see, a little refreshing, a little splash of green. But Ether has also been getting pummeled as well in the wake of Bitcoin, seeing some red, just the entirety of the crypto market seeing a corrective period. But I do want to talk to you guys about Ether. It's been a few videos since we've covered Ether, so we will dive into ETH again. The king and the prince, the king and the queen, whatever you want to call them, the biggest crypto and the biggest altcoins. So we'll kick it off with crypto, move in to the equity indices, focusing on the NASDAQ and the S&P 500, or the NDAQ, NDAQ, and SPX. So we'll take a look at these tech-weighted indices because, in my opinion, if you guys, again, have been watching, I do think capital is going to start to flow out of the tech sectors. And the big question on my mind right now personally, and what I've been thinking about ever since I foreseen this coming, which we're finally starting to see pan out. As we dive into the charts, you will understand why I do still skew bearish. Technically, these charts still look bearish. So I am prepared. And again, a big question that I'm asking myself that I do think you guys should think about yourselves is, if we do see large amounts of capital start to flow out of the NASDAQ, out of the S&P, out of the tech sector primarily, that's been absolutely ripping, that's been holding strong over the course of the better part of a year now. Where is that capital going to flow? Which comes into kind of the next names we're going to hop into. So after that, we will hop into the VIX. Of course, the VIX, or the CBOE Volatility Index, is inversely correlated to the S&P 500. If the S&P 500 goes down, the VIX goes up. It tracks volatility. So considering the SPX was down today, the VIX was up. Of course, I do have a few ETFs that I play along the VIX that we're doing very well today, that I'm very happy to have in my portfolio. And as we get into this, I will talk to you guys a little bit about hedges and how I was significantly green today while most of the market was melting, which feels very good. So VIX, talk a bit about hedges. We will then move into precious metals, silver specifically, silver miners to be very specific, were a big reason that my portfolio was like beautifully sitting in the green, sitting very pretty today. So silver miners popping off today, gold miners popping off, silver and gold spot looking very, very strong right now, especially with the decline of the dollar. So silver and gold both look like they want to break out. Again, summer of 2020, both silver and gold, precious metals, commodities saw a very strong summer in the wake of tech, of equities, again, doing poorly. And summer months are notorious for seeing sell-offs in equities, seeing like sell-offs in the NASDAQ, the S&P primarily. The Dow, a little safer from these pullbacks because they are more kind of legacy weighted with commodities and whatnot. But silver, gold looking very, very promising on the charts. We'll see if history can repeat itself to an extent. And then we'll close it out with the most macro play of all, the US dollar, or the DXY. This is the US dollar weighted against weighted against a basket of other international fiat currencies. So pretty much just tracks the strength of the dollar. The dollar not looking very good on the charts right now, and this is kind of confusing considering the dollar is going down, but the NASDAQ and S&P are going down as well. This is a little weird because usually everything that trades against the dollar will appreciate in value if the dollar is going down. But again, it comes back to kind of that fundamental argument that I've been talking about, that the NASDAQ and the S&P, they've just been absolutely ripping. They just, like, stocks only go up if you're looking at the NASDAQ and S&P. So I do think it's time for somewhat of an elongated correction with the reopening coming. I actually do think that the reopening is bearish for tech, just for reasons I'm sure you can imagine. People are going to be outside, less people want to trade. If the market's going down, less people want to put their hard-earned capital, if they're not getting unemployment stipends and stuff anymore. People are going to be less willing to put capital that they actually have to go back to work for now into the markets. And these are just a few fundamental things that maybe I'll dive into more as we cover the charts. But those are the names we're going to be covering. Before you dive into the charts, I do want to talk to you guys. Literally just read 3 sentences right here. It's Monday, Waves fam, and as expected, the markets are kicking off the week in the red. Thankfully, though, we came prepared. It may come across as a bit dark, but the portfolio being green while the majority of the market is red is exceptionally satisfying. So, again, you guys, I don't like being a bear. I've been saying this, although I've been bearish for the past week or so. It's less fun. It's way less fun being a bear than it is being a bull. I love revolutionary sectors. I base my channel around, like, biotech, crypto, EVs, all this stuff. And I do know it's a little bit more boring. That's why I have to throw BTC and ETH in. I do love these equities. I do love this revolutionary, what crypto is from a fundamental perspective. So I know these are a little bit more boring to talk about, but considering the current climate we're in, I do feel it's important to talk to you guys about this. So again, the bull days will be back, but I do want to let you guys know that, again, there are ways that in our scenario, and I hope like existing members of the Waves fam, if you guys have been watching, if you've been listening, there are ways when the market is pulling back that you can make money off a declining market. Okay, so whether that's put options, whether it's hedge, whether it's calls on hedge plays, or whether it's commodities like silver, gold, oil, like this morning was honestly great for the portfolio because we came into the week prepared. So if you guys do want to check out this portfolio, literally a complete breakdown of my entire portfolio, which is updated every single trading day during market hours, call options, put options, stock positions, cryptocurrency positions, complete breakdown, broken down in percentages, how those consume my portfolio. And I do update that every single trading day. With every update, I also send out a comprehensive newsletter explaining my thoughts, rationalizing my trades to you guys, throwing some charts in there, throwing price targets in there. And again, this is all in market hours. So that is $15 a month. First link down in the description if you're interested at all in checking that out. Means a lot if you do. I do put a lot of time into that, so I do appreciate that. But as always, if not, no worries at all. Let's dive into these charts. So Bitcoin, again, seeing a nice little pop right now, but still in a very, very steep downtrend. Before moving on, just get rid of these because as we scale around the chart, it's going to look weird. So Bitcoin, let's just zoom in here. So Bitcoin is in a very significant downtrend. You can see this purple line right here is the line of resistance. If we do see a pop over the course of the day, maybe by the time you guys watch this video, Bitcoin might see a pop to test the resistance on this pretty stark short-term downtrend beginning I would say May 11th. So over the past few days, as you guys know, we have been in a very, very steady decline. Almost the past week now, we've just been going down. So Bitcoin's still in a very, very strong downtrend. This is following the arrow of randomness very closely. And although we got very close, I still wouldn't be surprised if we come down to like 41 and maybe even 40,000 to see the next floor around $40,000. So which would be almost a 10% correction from here at this point, considering we're at 44K. So 8 to 10% correction from here. Maybe find a floor around $40,000. Very significant psychological even. But a level that I'm really looking at, to be honest, is going to be around $35,000. So I'm sorry, you guys, if I sound like a broken record. I keep kind of repeating these things. Please load. Please Wi-Fi. Do your job. But anyway, I have the line. You can see the lines here. I wish this freaking loaded. But there we go. So an area that I'm really eyeballing, that I'll be personally comfortable picking up Bitcoin at, is going to be around $35,000, which is this area right here. You could say this is a very, like, this is the initial high. This is the reason for this initial price target around $42,000, which it came very close to this initial high back here at the beginning of the year of 2021. So we came here. My next target is going to be around here because this acted as a pretty significant ceiling for Bitcoin after this first high right here. So you could call this a true initial high around $35,000, came up, came back down, used this as a ceiling. Once it truly broke out of there, that's when we saw that real parabolic rally that really kicked off Bitcoin to its like stark all-time highs around $60,000 plus. Okay, so I am personally a buyer. I personally feel comfortable buying Bitcoin around $35,000. Considering a decade from now, I do think Bitcoin could be at $500,000. Or like 5 years from now, I would not be surprised in the slightest if Bitcoin is around $500,000, which of course is over a 10x from this point. So it's all dependent on your time horizon, guys. But as a trader, I'm doing my best to optimize my profits, even if I'm very, very bullish on the long term, which I want to make very clear. I am. Okay, so that is Bitcoin. Let's move on to Ethereum, cover ETH a little bit. So ETH coming down perfectly to test the central trend line on this overall massive channel. So ETH could potentially be bottoming out here, but it's also looking pretty head and shouldersy because we have set a lower low. We have set a technical reversal. So similar to Bitcoin. Sorry guys, I just realized I did not give you guys my target to where I would flip bullish. So let's go back to Bitcoin real quick. Just take a look at this purple line. Bitcoin, if Bitcoin breaks over the coming days, I would say 40, just to play conservatively, $46,000. If we can clear 46K, that would signal a short-term reversal. And that would lead me to believe that maybe we'll come back up to test this previous line of support that once broken, that is really what triggered the sell-off and signaled an overall long-term technical reversal on the uptrend, because this trend line that was broken officially on May 12th was a very, very strong trend line that is very important. And again, that is what signals. That's why I have to, from a technical perspective, still skew bearish for Bitcoin. Okay. So I do still skew bearish, even if we do come to test, even if we do break 46K and we do come up to test, say like 50,000 plus, that would still be a lower high on the overall what is now a downtrend. Okay, so again, we'll cross this bridge as we come to it. We're definitely covering this over the course of the week, but I just had to come back here and let you guys know on a very short-term time horizon, that's kind of what I'm looking for as far as a short-term reversal in trend is concerned, at least, but still in an overall downtrend. Okay, so ETH is just a more volatile version of Bitcoin. That's not surprising considering the market cap is lower. Catching up pretty quick with the market cap though, it's crazy. So ETH, again, been in this beautiful, massive megaphone ascending channel here. And these are kind of just the levels I'm looking at here, you guys. As always, go into your trading view charts for yourself, draw these trend lines, especially if you're trying to trade these. If you just got the diamond hands, that's all good. I 100% agree with that. Ethereum, again, you guys, I bought Ethereum at $34 back in 2017, and a lot of that Ether I still hold. And although, again, shout out the portfolio, you guys know this in Discord, I have been liquidating my crypto positions, at least converting them into USDC or Tether over the course of the past couple of weeks now, just taking profits on these huge gains that we've seen. And again, I still believe in a long term, even buying at those levels. I mean, taking profits, not taking profits would be foolish in my opinion, but still a believer in ETH long term. Do we look overextended? Does Bitcoin look overextended? Does the NASDAQ, does the S&P look overextended to me? Who's seen, again, played a lot of hype cycles, played a lot of bubbles in my life. I don't think this is a bubble, but this is definitely a hype cycle, FOMO cycle. This looks toppy. I just talked about it yesterday. I've been saying it for the past week. And again, profits have been taken, but I still am a believer long term. ETH, to signal a short-term breakout, would have to clear this area, which would also kind of discount this head and shoulders pattern that's playing out. You can see left shoulder, head, right shoulder. Maybe we go sideways for a little bit. But ultimately, if Bitcoin continues to sell off, which again, you guys know that just from a technical perspective, I have to skew bearish. If Bitcoin does continue to sell off, I do think it's very possible for Ether to come down here to test, like by the end of May, to test about $2,200. This is the level where I would actually be comfortable buying back into Ether. Again, my average purchase price is still insane right now. It's rare that I take profits from Ether, but I couldn't not over the course of this rally, especially after this trend was broken right here. The line of resistance on the overall trend was broken. This area right here, that is like key textbook profit taking time right there in my eyes. Break the trend, see a little bounce up, because every trader on the planet is looking at that, and that's when I know to take profits. So again, you guys, I know this already happened, but I just want to give you guys kind of my thought process over the course of what was a short-term top at the very least. Okay, so price target for ETH on the downside. Again, maybe we reverse right here. Maybe we found support on this central trend line of the overall megaphone channel. But if Bitcoin does continue to sell off, if the crypto market does continue to sell off, if everything that I've kind of been thinking from a fundamental perspective does come to fruition, I think it's very likely that ETH will come down to about $2,200 by June 1st. So June 1st, end of month price target for ETH. Maybe we hit a little later. It might take longer to come down, but again, things fall a lot faster than they climb, guys, and ETH climbed fast, which means unfortunately it can fall even faster. Okay, so stay on your toes with this one, you guys. But again, as we test these trend lines, as we test these overall lines of support, as we reach these floors and start to bottom out and capitulate, getting ready for the next move up, that leaves time to pick up your favorite assets at a discount. Okay, so that doesn't only apply to BTC and ETH, it applies to literally everything in the market right now. Okay, so moving on, NASDAQ looking just still like, this is a very easily readable chart, you guys. And it looks to me like NASDAQ wants to pull back. So NASDAQ, again, like simple here. This is TA 101, this chart reading 101. Broke a very strong line of support at the beginning of March. So very strong line of support here on the uptrend. Pretty stark uptrend, pretty strong uptrend. But the NASDAQ did have a bad day today, and we kicked off the week with negative sentiment. I know right now futures are up, but futures were up yesterday as well. Futures, I put little weight on futures personally because, again, overall sentiment is bearish right now. The world is reopening. People are going back out. Tech had its rally. Everyone at this point knows about tech. If you're going to invest in tech, in the NASDAQ and stuff, in crypto, you would have done so at this point. Everyone and their mom knows about this. It feels, this is what like tops feel like. This is what tops of hype cycles feel like. And from a technical perspective, like strictly technical speaking, we have broken support on a pretty strong trend line, came back up, dead cat bounced, retested that prior support as a new resistance, and we are now in a technical downtrend. So my price target for the NASDAQ, let's bring up a price range right here, is going to be this yellow line. This is my initial price target for the NASDAQ, okay? It's because this acted as a very, very significant ceiling over the course of like a couple months right there. So from the beginning of January till like the beginning of March, so 2 months, this area acted as a pretty significant ceiling and then came up, came back down, tested previous resistance as new support. Again, all TA 101 right here. Trend lines, previous resistance will be used as new support, vice versa. Okay, so let's bring up a quick price range here. NASDAQ is going to be from current levels about 12% correction. Worst case scenario for the NASDAQ, in my opinion, from current levels is going to be to test this area right here. Like over the course of last summer was a very strong line of again, ceiling, floor. This trend line will likely come into play if this one is broken, and that would take us down to about 135. But just to sum it up, conservative pullback target for the NASDAQ as of right now, for me personally, is going to be about 15%. Okay, so I do think we will come down at the very least to this yellow line right here prior to resuming the overall rally. Worst case scenario is going to be about a 17% correction from current levels. Okay, so that's the NASDAQ. SPX is going to be similar, but probably a little more conservative here, a little less. But I do think the SPX over the course of the week will at the very least come to test this very, very strong line of resistance right here since like this November low right here, November of 2020. So about 6 months ago, just over 6 months ago, this low right here, creating a very strong overall trend line. This will definitely come into play. So I do think we'll for sure see some support around here, which is going to be, let's do right there maybe, I guess. So it's going to be about a 2.5% correction from current levels, but I do think that's going to break, and I do think when it breaks, we'll probably come down to test this previous high prior to this big rally that initiated at the beginning of April. So my S&P pullback target is going to be about 5% from current levels. If that breaks, then again, you guys we keep looking at these previous levels. So this high right here, this high right here, all of these previous highs will likely come into play. But short term, at least, I am expecting at least a further 5% correction, which is good, of course, for a place like the VIX, because again, the higher you climb, the harder you fall. You fall way faster than you go up because a lot of people just want to get the corrections over with. So the VIX is really living up to its name and being a highly volatile asset. So last week, again, when the S&P and the NASDAQ saw that crazy sell-off, the VIX absolutely exploded. Since then, it's wiped out almost all of its gains. All the ETFs did pretty much even out. But the VIX, considering I do think we're going to see a continued pullback in the S&P, is obviously looking good to me right now. So VIX, it's a little tougher to gauge kind of technicals. Like trend lines are a little weirder with the VIX because it's so sporadic. But a trend line that I'm looking at right here is going to be to test a line of resistance on this overall downtrend from the VIX. So again, high right here back in October, high right here back in February. It only makes sense to me that it's about time. And similar patterns here, you guys. You see a spike up, correction like what we just saw. I think it's likely we see another spike up again. Just, again, patterns, identifying these patterns patterns, identifying trends that have occurred historically. I do think it's likely that we do that. Best case scenario for the VIX, I think, is to come up to test this line of resistance, which from the current levels is about a 65% price appreciation. So, of course, that is great for ETFs. If you guys do want to know exactly which hedges I'm holding, exactly which ETFs to play, like the bear ETFs for the S&P, the NASDAQ, the calls for the VIX, the specific calls I have, again, portfolio newsletter. But again, there's a lot. You guys just you can always just Google like VIX ETF and you'll find one. Okay, so check that out. I'm very, very bullish. I'm very, very confident and feel very safe, honestly, with these hedge positions in my portfolio. And these hedge positions do consume a very significant chunk of my net worth at this point. Okay, so hedges and silver, which I'm extremely bullish on at this moment. Let's take a look at silver quickly. Silver, please load. Okay, so silver is looking amazing right now, you guys. Like, silver had a crazy breakout today. It feels so good to see silver breaking out and seeing this type of price action, seeing this volume is picking back up. Silver has translated finally to let's move my head to a strong buy, which is amazing at the moment. And something that I wanted to mention in the beginning too is I don't put a whole lot of weight on these TradingView meters, but TradingView, considering this is a platform, very complex algorithm, very complex platform, I have to assume that their algorithms are extremely competent because they are very technically savvy. I do put some semblance of weight on those meters, and Bitcoin right now just flipped to a sell for the first time in a while. So I do think there's more downside ahead for all the ones we just talked about aside from the VIX. Silver, though, as capital starts to flow out of equities, out of tech, primarily the tech sector, I do think silver, gold are great candidates for this capital outflow because the dollar is still looking bad, which we'll take a look at to close out this video. And the dollar is still looking bad. Investors still want to keep their capital safe in something that maybe is not tech, maybe is not so volatile, like crypto, like tech. And a lot of that capital will likely flow into the legacy safe haven plays that are silver and gold. I do like silver more than gold for a multitude of reasons. Silver, the above ground supply is it makes it actually way more rare than gold. The amount, the capacity at which you can mine silver and actually manufacture is the wrong word for it, but create usable silver is at this point a lot. Just it's scarce. It's actually scarcer than gold in many aspects. Okay, so silver also way more volatile. Gold is pretty close to its all-time high that it set last year in 2020. Silver's all-time high was back in 2011 at around $50. So as far as upside potential goes, silver is going to be a more volatile asset. It's like Ethereum versus Bitcoin. Like silver's ETH and gold is Bitcoin, because silver's market cap is way smaller. It takes less capital inflow to silver to appreciate it. Okay, so I do think there's a lot of potential for silver. From a technical perspective, silver is in like one of the most beautiful ascending channels I've ever seen, like cleanest ascending channels ever. At the very least, silver is very, very likely to come up to test the top side of this ascending channel. But for all the reasons that I've been repeating over the past week or so, I do think silver could see a breakout. The longer you spend time in an ascending channel, the more strength you build, the more confidence you build, the more confidence investors build, and ultimately that does catalyze for that will ultimately, likely in my opinion, like a lot of times, this will catalyze a breakout. Okay, so if we do break above this, if we can break, as you guys know, like I do think this trend line will come into play. Let's just do end of month price target for over the next couple of weeks, even like May 24th. I do think we could see a $30 silver very soon. The volume's coming back, like excitement's coming back, capital outflow from tech. I do think we could see a $30 silver. If silver breaks $31, we're going to be absolutely off to the races, and I'm going to be so pumped to see that. And I will. Again, you guys, talking kind of short to medium term here, but things can get very exciting if some of these trend lines are broken. So that's silver. Very bullish on silver. Gold broke a very, very, very strong uptrend. So if you guys have been watching my Is It Silver and Gold's Time to Shine videos, this is such a strong trend line right here. Such a strong line of resistance from dating all the way back to gold's high in August of 2020. And just today we broke above it. Maybe just yesterday, but just in the past 24 hours, this trend line, this like absolute line of resistance has broken, and we have signaled a short-term an overall reversal. Like we've been bullish short-term, but this signals a long-term reversal, which is kind of the key, because gold is just the king asset of legacy, like of commodities almost, and this is so ridiculously bullish, and we just closed the daily above it as well. So gold, very bullish on gold, very bullish on gold miners. Same here, you guys. If you want to know the specific silver miners, gold miners that I personally like, and I will be buying calls, especially if we see a short-term correction. I mean, I'm super excited about the potential of gold miners and silver miners more specifically. Okay, so that's gold. Upside price targets, I mean, is just going to be like right off the bat. I mean, we have to go to the daily for this. And you know what? We'll actually close out this video when we take a look at the DXY on the daily as well, because it's very macro. So, I mean, best case scenario for gold, now that it's broken this downtrend, which is, again, very, very significant line of resistance that has just been broken. So super exciting if you are a gold bug. Not really gold bug myself, but I know there's a lot out there. So shout out to you. Very exciting times for gold, more exciting for silver once again. But I mean, best case scenario by the end of the summer, see if history can repeat itself again. This peaked out. Gold set its last high in 2020. It's all-time high on August 10th of 2020. So if we see like an August 10th, if we test this trend line again, that'll take us to about $2,600. So price target for gold over the course of the year. Again, gold moves slow because it's such a large asset class, like $10 trillion market cap. It will move slow, so maybe by the end of the year, I wouldn't be surprised at all to see a $2,500 gold, which for gold is very impressive, okay? So, close it out with DXY or the DXY. Again, DXY is not looking good, you guys. DXY is still in a DXY is still in a massive megaphone channel and in a strong downtrend on short to medium term and like long term. So, DXY from every angle looks bad. Fundamentally, will we bottom out at some point? Will the Fed choose to raise rates? Will they have bickerings of raising rates, which will scare people into wanting the dollar, into another liquidity crisis? I don't think it's possible that we see a liquidity crisis like we saw in March of 2020. This the likelihood of a black swan event is pretty low in my opinion. But strictly from like fundamentals aside, strictly from a technical perspective, the dollar looks very, very bearish, which again is very good for safe havens, the legacy safe havens like silver and gold. Bitcoin, king inflation hedge asset, long term in my opinion. But again, Bitcoin's just been appreciating so significantly. Tech has been doing so well. I just think they're a little overextended. They need to see a correction, and capital will ultimately flow into plays like silver, gold. And even if DXY does continue to go down, that strengthens the bull case for plays like silver and gold that much more. Okay, and like oil, commodities, copper, just all the good stuff, all the boring but good stuff. Okay, so pretty exciting times ahead. Price target for the dollar. It only makes sense that we ultimately come down to test the bottom side of this megaphone channel right here, which would take us down to the 80s, which would be the first time since January of this year. Maybe double bottom over the long term, maybe bottom out around like 89.5, 89.50, and then slowly start the reversal. Because at some point, you guys, I do think the dollar is gonna see an uptrend once again. I'm a dollar. I don't think the dollar is although there are many arguments, especially if you're involved in the Bitcoin space. You've been a Bitcoin bug. You've been doing all that fun research. There's a lot of reasons that you could be bearish on the dollar and think the dollar is absolute trash. But the dollar has just declined in value so much. It's lost so much value. And I do think that the Fed will not allow for the dollar to just become absolutely obliterated. Okay, so again, dollar, where do we bottom out? In my mind, it's probably around like the $89 region, 89, like just above 89 bucks. But I do think that we will bottom out, and over the course of the summer, maybe by the end of the year or something, I do think the dollar will start to reverse and work its way back up. Okay, so we'll close it out there, you guys. Again, I know that especially the dollar is pretty boring, but the financial markets are all one big ecosystem, and it's very, very important to have your finger at least somewhat on the pulse of everything that's going on in the macro, because ultimately that will aid your decision making in the micro, because again, it's all one big ecosystem. Everything works together in a sense. So if you guys are still watching, I appreciate you sticking through the boring stuff, but this is the stuff that I feel is important, so I want to share with you guys. So please let me know in the comments down below whether you're bullish or bearish on Bitcoin, on the equity markets, on the tech sector, on high-risk sectors, what your favorite play is right now. If you're bullish on silver and gold like me, if you got hedges in your portfolio, let me know. Anything you want to talk about, always love talking shop with you guys. So I'll catch you guys downstairs in the comments. And until next time, always remember, take action, make waves. Peace.